Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another binary option trading, binary option strategy video on iqoption strategy video based on those kind of concepts which I have explained in the ebook. Get this ebook, you'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame, any kind of financial instrument, and any kind of broker. So get this ebook, you'll find the link in the description, and in the description you'll find also the link to the Facebook group. So okay, let's see. I will not do this kind of explanation what kind of concepts you should know. Yes, because else the videos will be always too long and a little bit annoying for those who are watching them. I will do them only a few times. Yes, and I think this is already done. You should know already what kind of concepts. You should know those kind about the candlestick pattern, those kinds about the chart pattern, and those kind about the concepts which I have explained almost often. And if you want to know which exactly, watch the latest videos, then you get yes, to get them all those kind of things which you should know. Yes, because I'm telling almost the same things. Yes, I'm showing you almost the same concepts, and if you are familiar with this kind of series, it's a binary option series. The playlist is called binary options. So watch these videos, yes, to understand what kind of concepts you should know to not even to get into the BOTT mentorship program, also to pass through the application process, yes, and to be a profitable trader, yes, because those kind of concepts are important that you understand them, each and every one, because they are fitting all together like a gear. Yes, so candlestick math, the four keys. Yes, you see all the order here, you have to pass through them. The fake breakouts, which are coming almost often, the highest probability trading setups, which are coming over and over again, that are the most important ones with this kind of concepts, which I have explained here below. Yes, about the support and resistance layer, how to draw them based on candlestick patterns. Yes, what this means. Yes, because it's not only meaning you draw for support and resistance. That makes you that makes it possible to you to trade almost nearly each and every candlestick, if you understand what the wick stands for, yes, and what the wick's upper shadow is showing a resistance, lower shadow is showing support, and if you understand this, you can apply this to each and every kind of candlestick, and then you understand from which level price will most probably reverse or doing a retracement. So then here, that's kind of progression. Yes, this is to see not alone. Yes, or you have to see this alone. That is the power of the candlestick if there is no trend and there is no key level and nothing. Yes, so that is what this kind of progression of candlestick patterns are telling you. But because the candlestick pattern has only a low impact of the trading setup, yes, nearly 20%, you have to understand that the trend and the key level, yes, and the rejection are the other percentage of the trading setup, and that have much bigger impact than only a candlestick. That is what a lot of scammers are trying to explain you, that they are doing everything only based on candlesticks. Yes, but this cannot be, because candlesticks has only a low impact of your trading setup, nearly 20%. Yes, and that is the reason why so many fail, because they try to copy those kind of candlestick psychology stuff. That's where they are trading each and every candlestick. So okay, let me see what's going on here. So that is this one. And then obviously that analysis, yes, the analysis of how you should do the analysis, and then obviously those 7th edition ebook stuff, yes, which is really important. And you see also often how often I name this, because if you, and this makes also a big part in the application process, yes, for the BOTT mentorship program. If you don't understand those kind of concepts, you will most probably don't pass through the application process because they are fundamental. Yes, they are crucial. If you understand this, what this means, because this is an understanding of retracement. Yes, understanding of retracement. Those kind of things are retracements in the new upcoming trend. Yes, and you have seen in the latest video how I have shown you this. This is also understanding of the market. If you do not have understanding or this kind of understanding of the market, it's really difficult for you to make profit. Yes, because you have to read the market, yes, and you understand what it's telling you. Then the entry point. You see almost often in my videos that I got at the money. Yes, I get often at the money. Yes, those one of at the monies would be out of the money if you would trade them without this kind of entry point stuff here, which I have explained in the 7th edition ebook. Yes, it's really important. It's crucial. You should try to trade this kind of concepts to implement this kind of concept into your trading style because they make the difference. Yes, and obviously the movement of the market itself. How market moves in waves, and that means if you have an uptrend in the purchase time, then you will get a retracement in the expiration time. That is also crucial. So then obviously market condition, what you should avoid and what not, what kind are the best, are really important. And then obviously this kind of stuff, if you are using the Bollinger Bands and the EMAs, that you get this kind of understanding what kind of trades, where you should do based on Bollinger Band and EMAs. So that was really a fast overview of those kind of concepts which you should know. There are much more, yes, but that are the most important. If you understand those one which I have named now inside out, yes, you are already at a good point, yes, but you should understand all of them. So, and that means you have to go through them. Yes, you have to watch the related videos. You have to apply them to your trading, maybe on your practice. Yes, on your practice almost often. And that means not only once or twice, you have to do this over and over and over again and recall and remembering what kind of concept you should have traded so that you get a better feeling for the market and you understand how to predict the right direction of the next candle. So, okay, that was this one, the fast overview this time. So, and now we are getting into the video, which I have prepared because you know I'm a European trader and I do not have the OTC market. So I'm doing this kind of recap videos, yes, where I discuss with you those kind of trades which I have already done to make it more with deeper insight and why I took some trades and why not. So, okay, so let's see. And as soon I enter into a trade, I will stop the video. But first of all, let me see if I can show you here or something about the market condition here. You see we have here important nearly flat 200 EMA, which is a sign that we have here almost a ranging market. That is also the reason why we get here consolidation. Yes, here consolidation almost. Yes, this is almost consolidation here too. Yes, a nice retracement, but really tricky. This candle moves down to this level and then it finished bullish. Yes, somebody would maybe do a trend continuation. And here you see also that kind of concept which I have explained before. If you would enter, yes, you can expect that the price moved in the purchase time down and in the expiration time price moved up. Yes, and that is how this candle was formed. Yes, it moved up. Yes, moved down again. Yes, and moved up again. Yes, so that is what you should understand. But it's the same candle. The movements, yes, behind this candle are different, but it's the same candle. So we have here a ranging market with a slightly downtrend. Yes, so only slightly, really not really strong. Yes, and you see already here the one deviation middle Bollinger Band, one deviation upper Bollinger Band is doing here something what looks like a little bit like a Bollinger squeeze. Yes, and there is also no breakout. This is like a trend line here. Yes. And it looks here like a fake breakout of this. And so we have here a downtrend with a fake breakout, with a pullback of the 200 EMA, yes, and after this with a slightly downtrend. That is the market condition here, what you should know, yes, and so let's start, and as soon I enter into a trade, I will stop the video. As you see, the candlestick is going down, like I have explained before, yes, that we are in a slightly downtrend, but we are already far away from the 2 deviation Bollinger Band. We have something what looks like a nice support and resistance level, and that's the reason why I entered into a call. So, yes. And why I have done this? Yes, there are some reasons. Yes, the first reason was that we are going far away from the 2 deviation Bollinger Band. Yes, the second reason is we have a almost flat 200 EMA, which I have explained before that this is a sign that there will be most often coming up some kind of consolidation and consolidation areas. Yes, and that a price will do most often this kind of behavior here in a downtrend, that there will be retracement, and that was the reason why I entered here into a call. And you see it finished as a spinning top, and after the spinning top I entered into a put, yes, because I was expecting here a bullish candle. Yes, if it would be still into a consolidation area, it has been finished as a bullish candle. Yes, because there's no consolidation area is ranging. That means price moves from one range to another one. Yes, and so I was expecting here a bullish candle, but this was not a bullish candle. It was a bearish spinning top, and that was the reason for me that price has broken through this round number here. Yes, and is going to move downwards. Yes, and this kind of touch of this level here by this kind of shadow was showing me already that we are getting here into a trend continuation. Price moves really strong down, yes, because there was nothing in between. There's no support and resistance level in between, yes, and got this kind of movement here. So after this, you see this wick here is giving the hint that the next candle will be a retracement candle. Almost, yes, or a reversal, yes, and so you could enter immediately, but the movement was too fast. That and you see here also again what I have explained about the movement of the market. Market moves first up, yes, and after this it retraces back, and if you enter on the first upward movement, you get most often out of the money because price retraces back. Obviously in this kind of candle not, because it was a huge candle, and you can almost expect that candle will go to the halfway of the previous candle. So let me do a little bit more because I'm drawing here. You see the half level of this candle is acting like a support and resistance level. Yes, this is the reason why this candle is closing close to this. Yes, and the end it retraces back, and you get for sure out of the money. Yes, if you would have entered in the first movement, because the first movement was sure a little bit above this level, and you get out, or you got out of the money by hair if you would have entered on the first movement of this strong movement. So after this, I'm doing nothing else. We have a downtrend. We get here an inverted bullish hammer, which closed above this support and resistance, which was a long time ago, which I have drawn. Yes, this candle here showing me us here in this kind of case buying pressure, because we have here a pre-long downtrend, and on the rejection on this support level, I'm doing here nothing else than a call option on support in an uptrend, upcoming uptrend, and that was the reason why I entered here into a call, expecting that the price will continue to going up. So the entry point was bad. You see the entry point was bad, and that was the reason again why I got this why I got out of the money. Yes, but because we are still into a reversal. So this kind of concept here, yes, with the weak candle, somebody, and you see that is exactly this, what I have explained in the ebook. Yes, if you have a reversal, yes, and then this candle is not, and this I have shown you almost really often, yes, and you see this kind of weak candle, then you can expect that the next candle will be going down, yes, because this candle here, this running candle, the previous candle didn't unfold like expected. Yes, this had been not an indecision candle. This had to be a bullish candle, yes, because I was expecting that we are now getting into a reversal, but this was not a reversal, this was only a pullback, yes, and that's the reason why I entered here into a put. So let me show you this concept because this is important. I use it really often. This is the process of elimination, yes, the method of elimination. Let me show you this, and that is this kind of concept. And I could show you also the other ones, yes, but I think I have explained this so often already that I show you only this now. So the process of elimination, yes, that is this one, yes, and you see, do you see this kind of candlestick pattern here? Yes, you will see this. This was this one here, yes, this is inverted bullish hammer, yes, inverted bullish hammer, this one here, after this weak candle, yes, which is not unfolding like expected, yes, what do you expect then? Yes, right, price will go down. And that is what I have done here, nothing else than this, what I have explained in the ebook. Yes, you see, expecting that price will go up because we have a pre-long downtrend. Now the uptrend will start, yes, because I was expecting a reversal. This reversal didn't happen, it got a weak candle, and that was the reason why I entered into a put. And the previous one, this trade before this, which was a draw, which was an at the money, that was the concept here about the entry point. If I would have chosen a better entry point, it would be not an at the money, it would have been an in the money. Yes, it was a bad entry point, and that was the reason. And all applied based on this kind of concept, which I have explained in the ebook, on the seventh edition of the ebook, about the purchase time and expiration time, yes, where you should understand only the concept, and then you are already right. So, and this one I have not used this time, that was the continuation, the prediction of the next candle. Okay, so that was it already. If you like this video, do a like. If you didn't subscribe, subscribe to my channel. And if you have something to say, drop me a line in the comment section. So I would say stay safe and bye-bye.